So, as you know, we've discussed regulation. MiCA is coming very shortly, as Robert highlighted on the first panel. We see time and time again that individuals and companies alike focus on the regulated impacts to the crypto and blockchain industry, and perhaps don't focus on taxation. As authorities now turn their lens to developing a reporting framework and considering harmonization across taxation, we are delighted to host a debate today with a fantastic panel, including representatives from the Commission, the Parliament, and industry. So I'd like to welcome our panelists today, and I'll ask each of them to introduce themselves, spending a couple of minutes discussing what they do and the work that they do in their respective roles. We'll start with Lidia, please.
Hi, I'm Astrid.
Sorry, Astrid, let's start with that.
From working for the European Commission in the Director General in charge of taxation and customs. And I work there as Deputy Head of Unit in the unit in charge of direct taxation and cooperation. So a big bulk of our work has to do with cooperation between tax administration, exchange of information, which will be very much a subject of today's panel. Thanks.
Thank you. Astrid, over to Lidia.
Hello, good morning to everyone. And first of all, thank you very much for the invitation. I'm Lidia Pereira. I'm a member of the European Parliament from the European People's Party. Since 2019, I have the responsibility of a vice coordinator in the Committee of Economy and Monetary Affairs, and as well as coordinator for the subcommittee on tax matters. So I'm very much eager to have the opportunity to discuss with you about blockchain, about cryptocurrencies. Recently, we have approved the report that I was rapporteur about the impact of new technologies on taxation, and blockchain was one of the key points on this text. So yeah, looking forward for the discussion. Thank you.
Thank you. And our third panelist, Max.
Yeah, thank you for the invitation as well. My name is Max Bernt. I'm Chief Legal Officer with Blockpit. We are one of Europe's leading crypto tax solution providers, especially also with regards to crypto asset service providers, which will be required by the upcoming DAC8 and CARF2 reports, also now tax relevant data and information. So I'm looking forward to the discussion today.
And myself, I'm Ian Taylor. I'm the Executive Director of Crypto UK, the UK's trade association representing the industry. And I also head up KPMG's crypto and digital asset business in the UK. All right, let's dive straight into it. First question, please, to Astrid. So let's set the scene. If you could please describe what DAC8 is and what it seeks to achieve, and perhaps from your position at the Commission, do you feel it's going to achieve its aims and when it will come into effect?
Thanks, and thanks for the interesting questions. So maybe, I see there's a lot of jargon today, so maybe I can start by clarifying what DAC stands for. So DAC is Directive on Administrative Cooperation. So basically it's a framework whereby member states cooperate among themselves, and one of the key aspects of this cooperation is exchange of information, and actually automatic exchange of information. So automatic exchange of information has grown over the years, which explains why we now are at number 8, DAC8. It would be the 7th Amendment, once it's obviously adopted. The idea is to expand automatic exchange of information to the world of crypto assets. It's indeed so that the automatic exchange of information allows for more tax transparency, allows tax administration to have basically the information they need so that they can apply effectively the rules. For such a tool to work and to be useful, it's important that it keeps up basically with the new economic development, new business models. And so far we had what we call the DAC2, which applied to the more traditional financial information. But crypto assets, I don't need to tell you, is something which is growing very fast and becoming, of course, very relevant also from a tax perspective. So the idea of DAC8, in a nutshell, is to expand automatic exchange of information to crypto assets. And how would that work? So basically, crypto asset service providers would be required to report information on an annual basis relative to income earned on crypto assets by crypto asset users. This information, once reported to a tax administration in the EU, would then be shared across EU member states so that each one of them has the information on its taxpayers, on its tax residents. That's very much in a nutshell the concept of DAC8, which we are still, you were wondering about the timing, so we're still working on it. It was a work that is being coordinated, of course, with what is happening at the EU level and international level. When I say EU level, luckily, we have had several presentations already on the MiCA, on the AML rules. But as you see, the EU framework, when it comes to crypto assets in general, is developing. And of course, DAC8 will align with those developments. We are also looking at what's happening at international level, because tax transparency is not only occurring within the EU, there is also a global exchange of information under the leadership of the OECD. And the OECD has very recently, now in October, published a crypto asset reporting framework, better known as the CARF. And of course, our work here in the Commission is taking this into account, trying to align as much as possible with this ongoing work. So you were asking whether what we hope to achieve and whether we suspect we'll be able to be successful. Well, actually, tax transparency has already existed for some years, as I said, applied to different fields like traditional financial products. And tax transparency has shown to be very effective in terms of enabling member states to better fight tax fraud, tax evasion, to induce correct compliance, correct reporting. So we're very much hopeful indeed that DAC8, once adopted, will contribute to fairer taxation. It will also contribute to a more level playing field. As I said, financial products, traditional financial products, are already subject to reporting, to an exchange of information. So here we are in a way completing the net in a way by making sure that all type of financial products are subject to similar reporting obligations and exchange of information. So we now working hard in making this a reality. And by way of a snapshot, once, of course, the Commission makes a proposal, this is then subject to a discussion in Council where the proposal needs to be agreed unanimously. And once agreed unanimously in Council, it will then enter into force after, start applying after some time, of course, for allowing the correct transposition. But just as a way of conclusion, and also going back to the title of our session, DAC8 will not be about harmonizing the way cryptos are taxed in the EU, but it's really about ensuring that our member states have all the information they need so that they can simply properly apply their tax rules and make sure that taxes are paid when they're due. So with this, I will leave it and happy for further discussion.
Thank you very much for that introduction. And so in essence, what we're seeing is similar to how MiCA can be likened to MiFID in terms of regulating crypto as a service, like a financial service. The crypto asset reporting will now fall into the regular framework that exists for financial securities. So now over to Lidia. As an elected MEP, what is your view of this latest version of the Directive on Administrative Cooperation? Do you have any thoughts with regards to how in practice this will be implemented? And then we'll pass over to Max as an industry participant to see how the implementation may work.
Yeah. Well, as we just heard, the Directive on Administrative Cooperation is an important tool to help the combat against tax fraud and tax evasion. One of the obstacles and challenges that were posed to the implementation of the current framework, which is DAC7, the European Parliament has actually already expressed a position. We approved the report to the implementation of the DAC provisions in September 2021. So more than a year ago, but I want to start exactly there. 1 year ago, we observed that the challenge posed by gathering information about e-money and or crypto assets was topical, and mainly because it is difficult to include this type of assets in exchange of information schemes due to their independence from intermediaries. We also called for the establishment of a comprehensive framework for collecting information about e-money and crypto assets. But that was not the first time the Parliament addressed the issue. Back in March 2021, we referred to it in a recital proposal to DAC7. And at the time, we noted that the proliferation of cryptocurrencies was already topical and should be considered in any effort to increase administrative cooperation based on the principles of subsidiarity and proportionality. Now, in October 2021, today, more than a year after this happened, and the foreseen deadline for the legislative proposal from the Commission for DAC8, we are expecting the long-awaited changes for the next weeks. It is only natural that the Parliament will focus on the dimensions it has been advocating in its opinions to the DAC proposals and in the implementation report. But I want to concentrate on the title of the panel and the question itself. And I'm happy to hear the Commission on its stand for non-harmonization, because the question is exactly, are the DAC provisions standardizing Europe's approach to crypto taxation? And the answer is no. It is clear that taxation is primarily a national competence. We have a legal and institutional framework that is based in the principle of national tax sovereignty. Of course, there are federal traces in some dimensions of tax policy, in particular the VAT regime. But when we speak about crypto taxation, we are talking about income taxation, and that's a national competence, and full stop here. The framework for the exchange of information in tax matters is subject to unanimity exactly because it regards to taxation, but we have a window of European competences on the minimum standards of cooperation between national tax authorities. So for me, the conclusion is obvious. We have a window of opportunity to improve cooperation and exchange of information mechanisms in the framework of crypto assets. But including crypto in the scope of DAC cannot lead to an interpretation that we are doing something close to harmonization. We have different approaches on crypto taxation from member state to member state. With DAC, we are only guaranteeing that member states exchange relevant information on such assets in order to improve the fight against tax fraud and tax evasion. And I say more, the DAC8 cannot be an opportunity for call for crypto taxation by a EU without competences on the matter. And it cannot be an argument for member states to start or aggravate crypto taxation. The second point I want to raise is in relation to the expectations concerning DAC8 proposal. And I will keep it short and focus on three major areas that I think we should prioritize. The main is the proportionate approach to the exchange of information on crypto assets, safeguarding the high standards of data protection blockchain technology allows today. On the one hand, we have to guarantee that there is an effective flow of information on the assets and the beneficial owners. But on the other hand, we have to understand the decentralized nature of such assets. Another dimension is technological neutrality. The proper implementation of DAC provisions cannot lead to a prioritization or discrimination of networks, protocols, or assets nature. And finally, DAC must be an opportunity to modernize resources. With more responsibilities and missions, national tax authorities must be properly equipped and capacitated to fulfill the set of the new competences. It seems only natural. This must be also an opportunity to explore the use of the blockchain technology to improve the efficiency of our tax procedures in line with the call of the report on the impact of new technologies on taxation. So I would say these are my general remarks. I think if I can conclude, yesterday I was in a debate about fiscal tax federalism or fiscal federalism in another occasion. But my point is, well, if we look at the US, there is tax competition between states. So I think the European Union cannot be even more federal than a federal country. But I think it's very relevant that we seek to have further cooperation, and it is crucial, as the Commission just said, that there's a better exchange of information between member states, because in the end of the day, it has impact on the internal market, on the integrity of the internal market, and so taxation really has to be fair, honest, transparent, and loyal among our contributors for the internal market. And I stop here.
Thank you very much for that. And it's a nice segue into talk about, you touched on how the technology can really improve some of the reporting, and this piece of new regulation is all about that. But you also touched on some interesting topics around how different jurisdictions, not just within the member states, are taxing crypto assets differently for a number of reasons. So we'll get onto that juicy debate after we've asked Max to sort of come in with his sort of overarching view as an industry from an industry perspective working at Blockpit. Can you discuss how you and your clients are looking at this proposal in terms of, for example, obligations, the practical implications, privacy considerations, etc.?
So there has already been a lot said before. So maybe let me start by saying that the European Commission and the European Parliament often call for three key elements. That's transparency, a fair market, and effective taxation. So with regards to the topics we talked about before, namely MiCA and the TFR, we see when we look at taxation that there are even more blurry lines. So even if we talk about the DAC8, we don't have a proposal yet. So I think one of the first steps is that we actually have something to discuss. But I think that the Commission made quite clear that the DAC8 will go in line with the crypto asset reporting framework as published by the OECD, keeping in mind the European approach. So first of all, I think one of the key issues that we have to talk about is that crypto taxation for the past years and centuries, since crypto hasn't been around in centuries, but for the past years has always been subject to reporting obligations by individuals. So now with CAF and DAC8 kicking in, also crypto asset service providers will be obliged to report certain transaction data of their customers. What we see from a practical point of view, and this is where I have to slightly disagree with Lidia, when it comes down to the harmonization of taxation within Europe, is what we will need for also such a crypto asset reporting framework to work within the European Union is common grounds and definitions. So we need a common definition on a crypto asset for tax purposes. We need straightforward definitions of taxable events. We need clear guidance on what valuation crypto assets have at the time of disposal and at the time of their acquisition. So I think this is the first demand that comes from a practical point of view, that we need clear guidance on how to tax crypto, because ultimately a crypto asset reporting framework is a good idea. It's something important, and it will go in line with the existing AML procedures anyway. So also CAF is referring to the standards, KYC standards of FATF. So this won't impose any much more reporting requirements on crypto asset service providers in this regards, and that already has been discussed in the previous discussions towards the implementation of AML standards within the European Union. But what we need is a clear guidance on the actual taxable events, what the crypto asset service provider has to report, in which format they have to report. So we need we have seen with AML, for example, a paradigm shift where we have now more regulations in place, with also new anti-money laundering regulation coming up, whereas with taxation, we still just have a directive that will be up for individual member states implementation. And as we see from a practical point of view, also with the prior DAC directives, there was major differences within member states. So we really call for precise framework that doesn't leave too much room for speculation, so to say, and for crypto service providers to be able to comply with these demands.
Thank you, Max. So in short...
Sorry, maybe just one more question regarding the privacy issues. I think with privacy issues, it's something that has been discussed in regards of AML quite a lot already. When it comes down to crypto asset, to the reporting framework and the communication amongst crypto asset service providers, there will have to be certain channels in place that are GDPR compliant. And this is something we don't see yet.
Yeah, and that's super important in privacy. And so in summary, in theory, it's great to have a universal reporting framework. Everybody understands the theory behind that, tax avoidance, criminal activity. But what we're saying is the actual clear definitions of how to treat these are lacking. So how the heck do you report them? And we see across member states and outside of the Eurozone, different jurisdictions approaches. So for example, the UK taxes crypto for individuals as property, and it taxes crypto to crypto transactions. Other European countries do not. It's only when you cash out to fiat. And there was some recent guidance in the UK, and I'm not going to focus on the UK any longer. We've had enough of the UK news this week, is that when you lend a token into a decentralized platform, that's considered a disposal at the time you lend it, even though you still own that asset and you expect it to come back. So it's really conflicting. And then I just sort of open up, we've seen countries such as Portugal and Ireland spin up regulation, taxation that benefits people in this industry to come and live there. What does the panel think about this?
Happy to give it a go, start. No, maybe first in terms of the information to be reported and coming back also on Max's point on the need to have clarity. I mean, the way that the DACs have been designed so far has generally been to really identify relatively precisely the type of information to be reported, indeed, to ensure that there is consistency and also usability across the board of this information. So there is a certain level of precision and detail in terms of the type of information to be reported. When it comes to taxation, I mean, I also take the point that, well, this is in a way not a new, but I mean, a developing world, I mean, which may raise questions in terms also of the taxable events, etc. And we certainly see the interest in sharing practices, developing common understandings and fostering a common understanding, sharing of best practices in terms of what, of how such income, such revenues can be taxed, which is, I think, very much in the spirit of clarification and making sure indeed that at the end of the day, we have fair and effective taxation, which is very much what we strive for.
Mm-hmm. Just in the last couple of minutes, Lidia, do you have a view? And then perhaps Max to finish off regarding the question.
Yeah, well, I just want to go back and take the opportunity also to take the words of Max. And actually, in the report of the European Parliament, we asked a study to the European Commission to provide clarity on what can be defined as a taxable event, because it's so not
to keep your head
working much. Yeah. Because it's a patchwork. If we look at the map of Europe on how member states address what is a taxable event, but I think first, before taking any decision, it's important to have the most information or the best information possible, and hence the call for having a study to understand what is happening in Europe and how we can address in a better way to issue some guidance on how we can pursue, or how we can pursue the address of taxation in Europe, but not forgetting the competences of the member states, and to leave some level of discretion to have the opportunity for member states to have some competition. Mm-hmm. As I said, if it's loyal, transparent, and that does not harm the internal market, mm-hmm. It can be positive. And I think the vision of the European Union in what defines how we want to be in the framework of innovation is very key. And this is a political stand. We see the growing markets of cryptocurrencies in the US, in Asia, but we also see the potential of blockchain as a whole and as the value added to other sectors and other dimensions, in particular in the field of taxation. So I think Europe really has to sit on the forefront or on the front row for innovation, and that should guide all the other options in relation to matters as taxation. Thank you.
Thank you, Max. Just some final.
I can just agree with Lidia when it's important not to overregulate and go over the top, so to say, especially when it comes down to new developments such as decentralized finance. It's very important to first understand this topic and then publish straight legislation, so to say, or like guidelines on this issue. But ultimately, also, there's a huge demand on guidance for member states of the European Union on how to tax crypto. Because right now, it's often like try to fit crypto into traditional boxes or traditional regimes that are existing within member states, and often they just don't fit. So basically, with crypto, we have security, we have utility, and we have payment tokens, right? But this is something which is not often seen from a tax point of view. So, like you said before, it will be very, very important to give guidance on, for example, is crypto to crypto a taxable event? Yes or no? For example, in Austria, it isn't. In Austria, actually, we just introduced one of the first crypto-related taxation systems in the whole of the European Union. So we see crypto as part of capital gains. The crypto transaction are not a taxable event, and the crypto asset service provider based in Austria has to withhold taxes for their customers. So basically, there's also, of course, benefit of the doubts clauses that allow the crypto asset service provider to estimate the acquisition costs of crypto assets. But ultimately, what they thought of is trying to match the crypto asset market with the existing stock market and implement a similar regime that is known from the stock market with brokers, for example, where they would withhold your taxes as well, which I think is a good approach. But of course, it's just one way to go. But ultimately, what we need from a practical point of view is guidance where we say, okay, we have 4 different options, and ultimately these options we can choose from. But what we don't want to see is 27 different jurisdictions and 27 different tax regimes, because ultimately that will also make the reporting processes much harder to comply with. Because if you report certain tax-related information to governments, for some governments, there is, or in some tax jurisdictions, the cost of acquisitions are calculated in a different way than in others. So when it comes down to the crypto asset reporting framework, or the DAC8, I think ultimately what this will trigger is a harmonization of a common understanding what are taxable events and how to treat a crypto generally from a tax point of view.
Okay, so in summary, overall, the idea is good. We have challenges around definitions as how to report, and internal competition is good for the Eurozone. So with that said, I would just like to thank my panel. Thank you for your time. Thank you.
Thanks.
Thank you.